G'day everyone, welcome back to Pete's Investing. Today is Friday, July 15, 2022. In this video, I'll be providing an update on the price of some global share markets and using Fibonacci retracement and expansion levels to anticipate price movement. Again, it's not financial advice here, it's just purely an educational series. First, let's look at the US market. Now, it's done quite well since the start of 2020. But since the start of 2022, it's dropped off quite dramatically. So let's see what's happening here. Let's put a retracement here first of all, from the highs and the peaks back there and to where we are today. So what we're anticipating is it's going to fall below this 3640 level. There's a minor support there. We expect it to fall it further and probably end up going towards this minor support of 3400 or even 138% of the Fibonacci down to about 3200. So first we expect it to anticipate possibly falling below this 3640 level before we look at making any further action in terms of any short movements. Look at it further. Let's put another expansion of Fibonacci from that level to that level. So again, if it falls below this 3640 level, it's going to be a 138% of that smaller range, target of about 34, 35. But looking at the bigger range there, down to about 138.20 if it falls even further than that. The Australian market, the Aussie 200, you can see here since the start of COVID, after the decline, that's the range we drew there. The price has fallen off after almost a triple top there. It's fallen off back to 23%, 38% Fibonacci retracement level. So it's bouncing off this minor support. So if you look at it further on, let's draw another expansion from that low, from that high to that low. And that could possibly be a triple top. If it is so, then we're looking at a target down to about a 200% level from that triple top scenario. But let's look at it more conservatively, from that high to that low. And if it bounces again below this 64.10 level, anything below that, we're looking at the short-term target of 138% of Fibonacci down to this support area of about 6,000, about 60.20 or 6,000. This is the FTSE, the UK market. As you can see here, the range since COVID is quite a drastic decline, like most markets. Hasn't really broken above that high there pre-COVID. So it's been sort of bouncing off that major resistance area. It also came down and rested along this just below the 23% Fibonacci levels. More closely, we need to see a break below this support level for any further downside. And if it did that, let's draw that high down to about that low. It breaks below this support area, we're looking down to about 138% Fibonacci expansion, and that's at around about a 6600 level in the UK market. The German DAX, the German market, again, this is COVID area, and we've drawn a Fibonacci retracement from the highs back here in late 21. There's a double top there, and that you can see there it's already hit the 200% mark of the double top. And just to show you the effects of that, if we went from there down to that level there, it came and rested upon that 200% key support resistance area. So it would have, if had you gone short back here, once it broke through that area, that would have been your initial target. In this case, it actually went down as far as the 261% Fibonacci. Now let's looking at it more clearly. If we wanted to trade on a short level of this one, it's bouncing off this support area. Anything below that, we're going to look at it going towards at least the short term, the 50% key resistance area. And then even further down here, so that key resistance 50% is around about the 12,180 mark. And then on a 61% retracement on the wider range, we're looking at a 11,170 target. So let's see what it does in the coming days if it breaks below this area. Lastly, let's look at the Indian market, the Nifty. So again, I've drawn a high to the low. It's done really well post-COVID. You can see here it's rested just below the 23% Fibonacci retracement on that range in that key support area. Now it's broken below that key support area to this minor support. So if it breaks a lot lower than that, we're going to see it break and fall down to about the 38% mark, which is about 14,290. Anything further than that to the 50% level at 12,970. We need to see it break below this 15,200 level before we take any short action. If we wanted to draw a Fibonacci expansion on the on that little ABC range, we'd probably do something like that. You can see there the short-term range. If it fell below there, your short-term target would be at 14,700 roughly. If you want to go to 161% target, that's at a 14,150, and longer term 200%, it's 13,180. But again, try to be conservative if you're going to do this. Go short, hit these shorter targets if you're going to. To be able to ask specific questions, feel free to log on and sign up to the Pete's Investing Patreon page. That's where I get more specific questions answered and help support the channel. Thank you.